Top 4 reasons why NIO stocks is a buy. Hello lovely YouTube family, welcome back to our channel. In today's video, we're going to talk about the top 4 reasons why NIO stocks are a buy. Before we get into the reasons, let's take a look at what NIO stocks are. NIO is a Shanghai-based Chinese multinational vehicle company focusing on the design and development of electric cars. Other than the normal vehicle manufacturer, the company is also active in the FIA Formula E Championship, albeit since selling to the Lisheng Racing, NIO has stopped supporting the team. William Li, who is also the chairman of BitAuto and Next EV, created NIO back in November 2014. Tencent, Temasek, Sequoia, Lenovo, and TPG were among the first to invest in NIO after its inception. On the same day the company was founded, the NIO EP9 sports vehicle made its debut. The company also has 3 divisions, which are NIO Life, which is a clothing collection, NIO Service, which offers different services worldwide, and NIO Power, which is a network of battery swap stations, Power Mobile, Power Home, and superchargers. NIO stocks just stock the company trades. Reasons you need to buy NIO stocks. NIO's year has been quite incredible. Just last year in 2020, the stock went up over 1,000%, shattering this S&P 500, and in 2021, Tesla has increased its own stock by 670%. In November 2020, NIO traded at $57.2, and it recently came back from this high. It currently trades at around $45, but this should not be reason enough to dismiss it just yet. A smart trader knows that this minor pullback is an opportune time to buy the stock at a much cheaper price. Based on its good monthly growth and earnings, this stock is bound to be one of the best in the future. With a growing demand for electric vehicles, this will ensure the stock price rises over time. When the company's December delivery data are announced in early January, the price of the stock will jump even further. So what are reasons why NIO stocks should be bought? Number 4, the growth of earnings remains solid. Excluding a few other things, the company's loss was about 12 cents in the previous quarter, and this was better than what the analysts had previously projected. Their average projection was 18 cents. Its sales of $666.6 million, which were also above the average forecast of $663.29 million. Its gross margin increased to 12.9% compared to 11.25% on average. According to the company's CFO, Stephen Wei Fang, the vehicle margin grew to 14.5% in the third quarter of 2020. This was thanks to another quarter of record high deliveries, as well as additional improvements in average selling price, material cost, and manufacturing efficiency. Additionally, they generated positive cash flow from operating activities for the second consecutive quarter, and with all this in mind, the company's expansion shows no indications of slowing down in the near future. Number 3, electric cars are still picking up. The sale of electric cars is bound to rise as time goes by. China, Europe, and the United States are all at the forefront of pushing for a greener future, which will translate to more sales. Another great example of proof that electric cars will be on the rise was a move made by California Governor Gavin Newsom. He recently signed an executive order prohibiting the sale of gas-powered passenger cars in the state beginning in 2035. Of course, these other cars are bound to be phased out as time goes by. Furthermore, researchers at Cairn Energy Research Advisors anticipate that global electric vehicle sales could increase in 2021 as countries around the world are starting to buy into this idea. According to the business, global electric car sales might increase by another 36% by 2021, surpassing 3 million for the first time. Number 2, the company's delivery numbers are increasing. The company has managed to deliver more than 5,000 vehicles since October 2020, and this is more than double throughout the years in November for the 8th month consecutively. NIO's delivery increased by just over 100% year-over-year in October. The company's deliveries have increased by 111% year-over-year to 36,721 cars in the last 11 months. The stock is expected to rise again before the firm releases its December delivery data in early January. The company's stock normally swings higher when the firm reveals its delivery information. This allows investors to gauge the company's capability and future growth to allow proper investment decisions. After the information was shared, the company's stock has significantly grown in the months of April, May, June, and early July. Number 1, temporary pullback. One may be tempted to think the company together with its stocks is on its way under, but be rest assured that the pullback is temporary. This is the best time to purchase before the prices start shooting up, and trust me, they are about to. The corporation indicated it would sell additional 60 million shares of its U.S. stock after the market skyrocketed, a Chinese electric vehicle sales pickup. The cash collected from these shares could help NIO expand even further. Furthermore, the Chinese government appears to desire more electric vehicles on the road. Existing shareholders will be diluted as a result of the stock sale. A point to note is that after selling 75 million shares in the United States in August, NIO's price soared from $13.20 to $57.20. This, coupled with the high demand for electric vehicle sales, are unlikely to slow down in the future. The company has also developed a slew of other growth accelerators. How will one benefit from purchasing NIO stocks? The main aim of investing is to benefit. If an investment does not bring you a reasonable amount of return, then you're better off staying away. The company has continued to grow on numerous levels, but the stock, which once had a market capitalization of almost $100 billion, has plunged by more than 40%. This does not mean that the stock is cheap now. It means one has more than enough time to look at how you're going to benefit in the end. The long-run results. The prospective market is the first thing that draws anyone who wants to invest in. Electrifying cars appear to be on a collision course with reality, and there's no going back from here on now. Bloomberg NEF predicted that electric car sales will more than quadruple from 1.7 million in 2020 to 26 million in 10 years. In another 10 years, they are expected to more than double to be at 54 million. So, in an actual sense, NIO is exactly where it needs to be. Additionally, NIO and its partners Jack Motor began the development of a new industrial park in Hefei, China, in conjunction with its city. A new facility will be built in the park to facilitate future industrial expansion. The product is offering. The company sold 44,000 electric vehicles in 2019, up 113% from the previous year. This further accelerated in the first quarter of the current year. In that quarter, NIO delivered 20,060 automobiles, which translated to an increase of 423% every consecutive year. NIO has increased sales by offering 3 electric SUV models so far. However, it will begin manufacturing of its much-anticipated ET7 luxury car next year. An income stream for you. What could be more important than your source of income? This is how you'll benefit most from investing in NIO stocks. Customers can also subscribe to NIO's battery swap subscription service for quick battery changing as a way to recharge. It recently announced intentions to expand that service in China, which should help the EV market grow as charging and switching infrastructure improves. Ford Motor Company NYSEF has teamed up with NIO to allow Mach-E owners in China to access the NIO charging network, indicating yet another avenue to enhance recurring revenue. The company will also make its first venture outside of China with that initiative. NIO intends to expand into Europe this fall with a focus on Norway at first. It's said that it will first sell its premium ES8 electric SUV in Norway, followed by the new ET7 sedan, which will be available early next year. The stock of NIO isn't inexpensive. Even with a share price in the mid-$30, the company's stock has risen 800% in the last year, valuing the company at almost $55 billion. Now, if you're serious about investing, you should not buy NIO stocks for now. The perks will be so much more in the future. Think of it this way: what might have happened if you had purchased Amazon in 1997? A $5,000 investment back then would now be worth almost $4 million. Because no one can travel back in time and purchase the stock, the best we can do is follow what experts have discovered to be the next best thing: a unique stock with incredible growth potential, which NIO stocks represent. And that will be it for today. I hope you liked the video. If you did, make sure to hit that like button and subscribe to the channel so that you never miss any amazing videos promised.